All right, here we go. So glad you are here. My name is John. I am a financial coach. And today's video, we're going to be talking about your 401k plan and especially about asset allocation. And so if you are with me live, be sure to say hi. And you're welcome to ask some questions about your 401k and especially about your asset allocation as we go through some of this today. This is not going to be a real long video, but there's a few things that I want to introduce to you and get you thinking about, okay? So to begin with, just I want to ask you the question, when was the last time you reviewed your 401k plan and specifically looked at what holdings were inside of it? It never ceases to amaze me how many people kind of set it and forget it, and they don't review it, they don't look at it. And one of the principles or rules is to do annual rebalancing as needed or as necessary. And so many people just never even look at their portfolio at all, which is unbelievable because that's all your retirement money, right? And how can you not pay close attention to that and make sure that you're caring for it as you should and as you can, because you got lots of options to make sure that your money is safe and growing so that you can hit your retirement goals. Now, speaking of retirement goals, I am going to share this with you right here, right now. I have a free online tool that you are able to use, and I put the link down in the description below. It's called Planswell, and this is a way for you to find out really fast if you are on track to reach your retirement goals or not. And it's interactive. You can make changes to it and see how it affects your income and your retirement age and make some tweaks and adjustments to it. But if you do that, then I'll be able to review it with you and help you find ways you can improve it and fine tune it and make it work even better. Okay, so check that out down below and after this video to take advantage of it. Now, a few things, like I said, there's a few tips that I want to go over, a few reasons why now is a good time to look at your 401k plan or retirement assets and look at asset allocation. And don't forget, this includes your old 401k. So if you've got 401k money at previous employers, grab those statements as well. And we want to make sure that those assets are working for you and are in a safe place, right? And that the asset allocation is adjusted there as well. You don't have to just leave it sit there. You can roll that over. There's no tax consequences and really often no fees, no additional costs out of pocket for you to do that. But ask me if you've got a 401k at a previous employer. Ask me about what you can do with that too, or do that free Planswell retirement guide, and I'll see it and then we can talk about it. Okay, but don't forget the old 401ks. Now, when it comes to asset allocation, the conventional moderate plan, you've probably heard about it, is the 60-40 model. And what that means is allocating 60% of your money into equities or stocks and putting the 40%, the remainder, into fixed income or bonds. So that's the 60-40 asset allocation model. Pretty prototypical kind of an asset allocation. You may, if you're younger, see suggestions of 80-20 or 90-10 or 100% zero. And what you're doing then is you're increasing the amount of equity or stock allocation and reducing the amount of fixed income allocation. And of course, you can pick any numbers in between. And typically the suggestion or recommendations are that as you age, you should be reducing the amount of equity allocation and increasing the amount of bond allocation. Now, really, those are just really super broad guidelines to start with, okay? But it doesn't mean that that's the right thing for you to do. And you got to remember what they're Wall Street really is suggesting here is they're selling you what they want you to buy, and they are limiting your choices in these 401k plans. The plan administrators and the custodians are limiting what you can invest that money in, and you have way more options outside of Wall Street, and that's what we're going to be talking a little bit about today. So my concern right now is that so many of you have not looked at your statements in a long time. You don't know what you own or what it's doing and what the risks are for your retirement money. And so I want to just bring that up to you because things are changing. I want to just introduce you to Warren Buffett. He's the gray-haired gentleman there in the middle. And we can see Elon Musk. Last year, Elon Musk made a post on X saying that he, meaning Warren Buffett, is clearly expecting a correction. And Elon said that because of the amount of cash that Warren Buffett and his Berkshire Hathaway had amassed. I think that was last maybe September or something like that. But guess what? Since then, Warren Buffett has sold more stock. So the facts are that over the last 9 consecutive quarters, Warren Buffett and his Berkshire Hathaway have been net sellers of equities. They've been selling off equities and moving money into cash like you cannot believe. So at the end of 2024, he actually had $334 billion with a B, $billion in cash in T-bills. And he's got more T-bills than the Federal Reserve. It's just unbelievable. So why on earth would Warren Buffett, the famed investor, go ahead and sell, 2/3 of his Apple stock last year and most of his, Bank of America stock and Citibank stock and some other banks? Why is he selling these great big, companies and moving his money into cash? You gotta be thinking about that, right? And if you look at his portfolio, his marketable securities, he's got about, I think it was $279 billion in stocks and then $334 billion in cash. So he's actually about, his asset allocation, you could say, is 55% cash and 45% equities. How does that compare with your asset allocation? Right? You probably haven't changed your asset allocation since you signed up for your 401k plan. But look at Warren Buffett. He's been changing his mix, his asset allocation over the years based on the business and economic cycles. Okay. So I want to encourage you, again, it's time to take a look at your mix. And maybe if you're concerned about volatility and about the prices going down, and especially if you're getting closer to retirement and you can't afford to lose any money, you got to change your asset allocation. Okay. The objective is to make sure that you're safe and able to sleep well at night and not worried about the stock market and what's going on with your retirement money all the time. So consider Warren Buffett and his changed asset allocation and look at and compare it against your own. How much cash do you have? How much equities do you have? And then what other assets do you have? Okay, because there's way more than just cash and equities. And even with the equities, you can then diversify your equities and break that up even more so that it's not all in an S&P 500 index or something like that, or a single growth fund or something like that. You can diversify within each asset class. Now, I want to share a couple of pictures here with you. This is an asset class return, right? Each asset class performs differently depending on the business and economic cycle and inflation rates and all that kind of good stuff. And if you look at this, you can see this great chart. It goes from 2010 to 2024, and it shows you these different asset classes and what their returns were. So if we look at 2024, you can see large cap, which is represented by the S&P 500 index, returned about 25%. The small cap which is the Russell 2000 index, returned about 11.5%. And then you got high yield bonds. We got emerging market equities. We've got just an asset allocation portfolio here. I think that's the 60-40. Oh no, it is a mix. 15% large cap, 15 international, 10 small, 10 emerging, 10 REITs, 40% high grade bonds with annual rebalancing. So when you complete a whole portfolio and do the asset allocation according to their guidelines, you can see last year that earned 7.4%. Over that 14-year period, though, it averaged just 6.5%. So we got to be considerate of which asset classes you're using and when, because sometimes that asset class is out of favor. You can see cash, real estate, international, and high grade bonds there. But it's always, it changes up. It just changes up. Now, what's a little bit deceiving is if you only look at this 14-year chart, you'll miss the decade before, which was the 2000s, which is commonly called the lost decade when it comes to equities, because equities did very badly in 2000, 2001, 2002, and they did very badly again in 2008. And so if you had your 401k plan invested in equities only, some people call it a 201k plan. What happened is they lost half of their portfolio in 2008, and the same thing or worse happened in the 2000 era. And if you lost your money in your portfolio in 2000 and left it, you didn't sell, you left the money, the same asset allocation, the same funds, it took you about 13 years to get back to where you were. 13 years to recover the balance if you didn't add any more new money. Now, of course, if you were young and just getting started out, you would be dollar cost averaging in, right? You'd be buying at this lower price all these years. But if you were retired in 2000, oh my gosh, you were in a world of hurt because you lost so much money in your portfolio. So we want to look at asset allocation because it'll help protect your money. So what is interesting about this chart, though, is that it misses some other significant asset classes. That's kind of the standard chart from a mutual fund company or an ETF company where they're showing you the options that they sell. But you're not seeing other options, other assets that you can invest in, okay? Now, real quick, does anybody know what was the #1 best performing asset class from 2011 to 2024? Anyone? Class? It's Bitcoin. Yeah, Bitcoin or cryptocurrency is a whole new asset class that can be included in your retirement accounts, and we should take a look at it. And here's really why. We can see in this chart from 2011 through the first 2 months of 2025, but look at the #1 performing asset class was gold. So in the first 2 months of the year, it was up 10%, way better than anything else on this list. In 2024, it was the top performing asset class as well. It was up 26.7%. Now, you can own gold in a 401k or in an IRA, a personal account. You've just got to make sure that you're with the right custodian that will allow you to do that. But gold is a fantastic asset class, and I'm going to talk a little bit more about that coming up because actually gold had a heyday in the 2000s. Remember, the lost decade for equities was a banner time to be in gold and precious metals. And so when one asset class is out of favor, another asset class will be in favor. And so we want to have these different asset classes in there to help make sure that you're always gaining money and to protect you from losses. But look at this. Right here, we can go down and we can see the US NASDAQ 100 on the third line. In 2024, it was 25.6%. So even with all of the Mag 7 and the AI and all this kind of stuff, gold still outperformed the tech stocks. But over time, the tech stocks have been outperforming gold. You can see 18.7% return from 2011. But look down here at Bitcoin. It's had 145.7% a year returns. So it's absolutely crushing. It's absolutely blown every other asset class out of the water at 145.7% a year return. So if we look down at the bottom, we can see in highest return every year. It lists Bitcoin, Bitcoin, Bitcoin. Then it was VNQ, and VNQ is United States Real Estate Investment Trust. But if it wasn't the best performing asset class, Bitcoin was the worst performing asset class. So it's either all or nothing, right? It's going to crush it and be number one, or it'll be the worst. But it has over time proven to be the number one performing asset class. So this is the reason why you might want to look at including it in your retirement portfolios. Now, don't think you can't include it. You can, but you just got to set up a special type of retirement account. It's called the self-directed IRA or a self-directed 401k, depending on your situation there. But you can include cryptocurrency in your retirement assets. You can include all kinds of different asset classes like gold and silver and other precious metals in those accounts. You just need to be working with the right people to help you do that. And if you have questions, let me know. Okay. So though that was a really great chart to check out those different asset classes. Now, I want to encourage you again to look at more than what the Wall Street provides, more than what your 401k plan at work provides, and get beyond the standard 60-40 or 80-20 or whatever, and incorporate some new asset classes. See what you can do to get some crypto and to get some precious metals. And precious metals right now look to be on a tear and are going to do exceedingly well. And I want to throw up this chart really quick. This is some technical analysis, another reason to consider your asset allocation from what they're called North Star charts. North Star charts. And they've got this technical analysis they've been doing that just I find absolutely fascinating. But what they're talking about is a capital rotation event. Okay. So they go back here to 1929 and they're tracking these major capital rotation events. So we had one in 1929, we had one in 1969, we had one in 2000, and it looks like we are now entering another one. And the capital rotation event is a big deal because it's a big shift from equities. So when you have a capital rotation event, equities will do really great and gold and silver and precious metal do bad. But when you have a rotation event, it's the flip. It's the absolute inverse, where we go from equities that have been doing really good, and now equities are not going to do so good, and gold and silver will be doing exceptionally well. And so they do this flipping back and forth, these capital rotation events. And what I found fascinating is to see this pattern repeating. And one of the keys to life really is to pattern recognition. If you can recognize patterns, then it'll help you be more successful. And so I encourage you to check those guys out, North Star charts. But look at the pattern, recognize the patterns there of when equities are doing really well, gold and silver is not, and then they flip over. And right now, according to them, we are right at the precipice of entering a capital rotation event. So this could be possibly a great time to reallocate your portfolio and start including some gold and silver in your mix if you haven't done so before. Okay. Now, lastly, I want to bring up some other asset classes that you probably have never considered, but have been around for a really long time. And I treat them separately. One is annuities, okay, which are basically savings accounts, but they're with an insurance company and not with a bank. Insurance companies are safer and more financially solid historically than banks. There's way more bank failures than you will ever find with insurance because they're regulated differently, and there's no all the reserves. They have to have all the reserves for what they're on the hook for, so what their promises are. So it's much safer. Now, the other one is inside of annuities. The other asset class is permanent life insurance. That's right, because you have a savings account in there that you get to accumulate money. And here's what's fascinating. Check this out. Ernst & Young is a huge accounting and consulting firm. And a couple of years ago, they did a study on asset allocation in retirement and what assets could you use to increase your retirement income and or increase your legacy, the money that you would leave behind for your loved ones. Fascinating. Okay, they compared just investments, so just stocks and bonds, and then they looked at what about if we use cash value life insurance, or what about if we use a lifetime income annuity. And what they found out was the optimal retirement plan would include about 40% of equities, 30% of permanent life insurance, and 30% of income annuities. That provided a higher annual income in retirement and more money to leave as a legacy. Boom! Most people would never even consider those as asset classes, but they are. And I treat them separately because they do complete opposite things from each other, okay? So look to include annuities and permanent life insurance into your mix. Now, what we're looking at when we do that is we're using those products as a bond alternative, okay? They don't replace equities. That's not what they do, but they are a fantastic bond alternative. And bond alternatives are important because now in this low interest rate environment, bonds just aren't going to be performing that well, but we have other market risks. As we saw in 2022, both the stock market and the bond market dropped about 20% that year. And that kills the whole 60-40 portfolio model. That kills this whole idea of stocks and bonds and using them to offset and balance things out, because they weren't offsetting. They both went down at the same time. So we can avoid that potential from happening again by integrating insurance products into your retirement plan. Okay, so you've got all kinds of options and opportunities. You just need to know how to set that up properly to match your desired retirement income and to give you the peace of mind and security of your money and not losing it in the market. Okay, so that's my encouragement for you today. I want to encourage you again, grab your 401k statements, look at your asset allocation, understand, are you all in U.S. equities? Do you have any fixed income? Do you have any cash? Do you have anything, other asset classes? I mean, like gold and silver or crypto or annuities or permanent life insurance? And review that and make the necessary adjustments based on, your situation and your goals. Okay. So again, don't forget, take advantage of the plans well. And calculate your retirement age and income. See if you're on track for retirement or not. This is free, but the information, I'll be able to review it with you and make some suggestions on how you can improve your financial game plan and your retirement plan, okay? So if you have some questions after the live on the recording here, please, we would love to see those. Put them down below, post your questions, and I will respond. But look forward to seeing you on the next video. Thanks.